Hey, what's up everyone? It's Cody here, back again, and today I'm going to take a quick look at where the market is going and the major news that's really affecting these movements. So pretty much everyone has heard that Russia has entered Ukraine, and this is causing a lot of fear due to the sanctions that can be put into place as well as other global roadblocks. Most of the global markets are down today, as well as equities and futures. So I think it's safe to say that right now Russia does have an impact on these markets. As we know, Russia is a transcontinental behemoth with over 146 million people. They have a nuclear arsenal. On top of that, they're also a key supplier of natural resources that do keep the world's factories running. But in a global economy, Russia's just a minor player. Italy, for example, is a much smaller country with half of the people and fewer resources than Russia, yet their economy is twice the size. On top of that, the country of Poland exports more goods to the European Union than Russia does. Though they're a smaller player, any major conflict across the world has historically had an impact in the US stock market, so I think this will just add to the downward pressure that we're already expecting due to the Fed's rate hikes. Inflation is having an obvious effect on the market right now, and the predictions on rate hikes this year are pretty scary, but once again, nobody knows for sure what's to come. For instance, Federal Reserve Bank of Philadelphia President Patrick Harker recently said in an interview that there's a lot of risk here, including that inflation is worse than expected or that it eases faster than the federal officials expect. So we have some officials saying that they need to be aggressive and others not so much. Personally, I don't think we'll see the Feds get too aggressive with the rate hikes. I'm thinking like a 0.25% increase in March and not a 0.5. So, of course, with all this bad news, I do expect the red days to continue for the next few weeks at least. But, as the great Warren Buffett once said, be fearful when others are greedy, and greedy when others are fearful. I myself have been buying into a bear play the last couple of weeks by buying into the daily S&P 500 bear with 3 times leverage exposure. That's ticker symbol SPXS. And I do plan to start dollar cost averaging into some stocks that I believe have a huge potential to bounce back, and such as URTY. So it's almost the opposite of SPXS, except it gives me 3 times leverage exposure to the Russell 2000 instead of the S&P 500. But there are quite a few stocks that I really expect to see a huge bounce back, and I'll get back to you guys with my picks and evidence to back those up. Till then, I'm diamond handing and dollar cost averaging. So let me know what you guys plan on doing going forward in the comments below. Thanks for watching, like and subscribe for more updates. New equipment is on the way to improve the quality, but until then, good luck and let's make some money.